"Get your hands off me," I said as security surrounded my desk. The CFO smirked, tossing my termination box. He thought he'd blacklisted me forever. He had no idea his private offshore database was already synced to the feds. 6 months before that afternoon, my world was quiet, structured, and entirely predictable. For 15 years, I served as the Chief Tax Compliance Counsel for Vanguard Logistics Group. My office was not on the executive 40th floor, with the panoramic views of Lake Michigan. I preferred the 36th floor, tucked away near the archives and the server rooms, where the actual work got done. My days were measured in tax codes, international shipping manifests, and double-entry ledgers. I knew every tax loophole, every transfer pricing regulation, and every import-export tariff, from the port of Long Beach to the docks of Rotterdam. Vanguard Logistics was a sleeping giant. We managed the supply chains for 3 of the top 5 retail giants in the United States, moving thousands of freight containers across the oceans every single day. The company had been founded 40 years ago by Richard Caldwell, a self-made shipping magnate who believed in hard work, low margins, and absolute integrity. Under Richard, Vanguard grew steadily, avoiding debt and maintaining a flawless audit record. For 15 years, I made sure we never paid a penny less than we owed, but also not a penny more. I was the shield that kept the IRS, the SEC, and the Department of Transportation from ever finding a single crack in our armor. But everything changed when Richard suffered a stroke and was forced to step down. The board of directors, eager to cash in on the logistics boom, brought in Marcus Sterling as the new chief financial officer. Marcus was a corporate climber from a high-profile private equity firm. He arrived with a flashy wardrobe, an entourage of young analysts who did not know the difference between a bill of lading and a customs bond, and a single-minded obsession: taking Vanguard Logistics public. A $1.2 billion initial public offering was Marcus's ticket to a massive payout and a seat on the board. He immediately restructured the executive suite, pushing out the old guard who valued operational stability and bringing in Ryan Van Camp, the CEO's son-in-law, as the vice president of international operations. Ryan was 34, possessed an MBA from a mid-tier business school, and had a reputation for spending more time at country clubs than in cargo terminals. Together, Marcus and Ryan were a toxic combination of ambition and incompetence. In the compliance world, you learn to read people before you read their books. The first time Marcus walked into my office, he did not ask about our historical tax liability or our risk profile. He looked at the stacks of tax ledgers on my desk and laughed. "Arthur, we are not running a community bank here," he said, resting his hand on the back of my chair. "We are preparing for a public listing. I need you to clean up these books, and by clean up, I mean I need you to find ways to make our international margins look double what they actually are. The institutional investors want to see high-growth tech margins, not boring old trucking margins." I looked at him over the rim of my reading glasses. "The margins are what they are, Marcus. We operate on a 4% net yield. If we artificially adjust the transfer pricing between our U.S. parent and the Dublin shipping subsidiary, the IRS will flag it under Section 482 within 10 minutes of our public filing." Marcus's smile faded. "Leave the IRS to me, Arthur. Just do your job, sign the internal declarations, and do not ask questions. The valuation depends on it." I did not argue. In my line of work, arguing gets you nowhere. Documentation is the only currency that matters. I quietly went back to my spreadsheets, but the warning bells in my head were ringing. Vanguard had always been a clean ship, but Marcus Sterling was about to steer us straight into a legal reef. Over the next 3 months, the pressure escalated. The IPO roadshow was scheduled for autumn, and the SEC Form S-1 registration statement was being drafted by our outside counsel. It was my job to sign off on the tax compliance section of the disclosure. Marcus began bypassing my office, sending draft tax reports directly to the external auditors without my signature. I noticed that the numbers being reported for our Cayman Islands holding company, Vanguard Caribbean Holdings, did not align with our actual shipping volumes. The Cayman entity was supposed to be a passive holding company for our intellectual property, primarily the proprietary routing software we used to optimize container placement. But the new draft ledgers showed a massive surge in licensing fees paid by our U.S. operations to the Cayman entity. nearly $18 million in just 2 quarters. By shifting $18 million in profits from the high-tax U.S. jurisdiction to the zero-tax Cayman jurisdiction, Marcus was artificially inflating our consolidated net income by millions. It was a classic transfer pricing manipulation scheme. If the licensing fees were not based on fair market value, it was outright tax evasion. I requested the transfer pricing study that justified the $18 million fee, but Ryan Van Camp's assistant repeatedly told me the files were misplaced or still under review. I knew then that they were hiding something. I did not push further with Ryan. Instead, I quietly logged into the database logs. I did not use my master admin credentials. I simply used the read-only access granted to my department for routine tax preparation. I began downloading every transaction log, every internal invoice, and every email correspondence between Marcus Sterling, Ryan Van Camp, and the Cayman Shell directors. I saved everything to an encrypted external solid-state drive that I kept in my desk drawer. I did not take the drive home. I kept it on the premises, fully within my rights as Chief Tax Compliance Counsel. I was building a defense file. In corporate America, when the ship sinks, the captain and the CFO always look for a scapegoat. And 15 years of experience told me that the compliance officer is always the first person they try to throw overboard. As the weeks crawled by, the tension on the 36th floor became palpable. Marcus's analysts were working late every night, preparing the final financial disclosures for the SEC. I watched the drafts change day by day, the numbers growing more aggressive, the tax liability shrinking magically through transactions that had no economic substance. I knew the storm was coming, and I knew exactly when it would hit my desk. I made sure my files were in order, the encrypted drive updated daily, and the legal statutes bookmarked. I was ready by the middle of June. The heat in Chicago was oppressive, but inside the air-conditioned offices of Vanguard Logistics, the atmosphere was freezing. The final pre-IPO audit was underway, conducted by a prestigious Big Four accounting firm. They were reviewing our international transfer pricing models to ensure compliance with the Internal Revenue Code. As Chief Tax Compliance Counsel, my desk was the final gateway before the tax disclosure went to the SEC. One Tuesday morning, a junior auditor from the Big Four team, a sharp young woman named Sarah, walked into my office. She looked nervous, holding a printout of our internal transactions between Vanguard US and Vanguard Caribbean Holdings. "Arthur, we have a discrepancy in the transfer pricing documentation for the routing software intellectual property," Sarah said, placing the sheets on my desk. The U.S. entity paid $18 million to the Cayman entity for software licensing this year. But when we look at the software development logs, the routing software has not had a major update in 3 years. The historical licensing fee was only $1.5 million per year. There is no independent valuation report to support this 12-fold increase. I looked at the spreadsheets. The transaction was logged as a high-value technology transfer. If we do not have a contemporaneous valuation study under Treasury Regulation Section 1.482-4, the IRS will disallow the deduction, I said. We would face a 40% valuation misstatement penalty plus back taxes. Where is the valuation study? Sarah shook her head. Ryan Van Camp's department told us it was approved by the executive committee, but they cannot produce the actual report. They said the CFO signed off on it, so it is fine. But we cannot sign the audit opinion without the supporting documents. I told Sarah I would look into it and send her back to her team. The moment she left, I locked my office door. I knew that if the valuation study did not exist, then the $18 million was not a licensing fee. It was a profit-shifting scheme. But where was the money actually going? I opened my terminal and accessed the Vanguard Oracle ERP database. Using our tax reconciliation queries, I pulled the wire transfer records for Vanguard Caribbean Holdings. The payments were sent from our main treasury account in Chicago to a Cayman bank account. But then, they did not stay in the Cayman Holding Company. Within 24 hours of each transfer, 90% of the funds were wired to an entity called Apex Logistics Solutions, registered in the Republic of Ireland. I did a quick corporate registry search for Apex Logistics Solutions in Dublin. The directors were listed as nominee attorneys. but the ultimate beneficial ownership registry, which Ireland had recently implemented under EU anti-money laundering directives, revealed the truth. The sole shareholder of Apex Logistics Solutions was a shell company registered in Delaware, which in turn was owned by Marcus Sterling and Ryan Van Camp. They were siphoning company cash. They had created a fake intellectual property licensing fee to drain $18 million from Vanguard's U.S. operations, passing it through the Cayman Islands to avoid U.S. tax, and landing it directly into their personal offshore accounts in Ireland. It was not just tax evasion. It was corporate embezzlement on a massive scale, designed to enrich them before the company went public. I felt a cold chill run down my spine. This was a criminal conspiracy. If I signed off on the S-1 disclosures, I would be committing securities fraud and tax perjury. I spent the next 48 hours compiling the evidence. I pulled the shipping manifests, the software development logs showing no updates, the wire transfer receipts, the Irish corporate registry filings, and the Delaware corporate records. I printed everything to PDF, encrypted the files, and saved them to the external drive in my briefcase. On Thursday afternoon, I called Marcus Sterling's assistant and requested an urgent private meeting. 10 minutes later, I walked up to the 40th floor. Marcus's office was massive, decorated with modern art and leather furniture. He was sitting at his desk, dictating an email to his assistant. When I walked in, he waved her out and closed the door. "Arthur, tell me you have signed the S-1 tax declaration," Marcus said. Leaning back in his chair, "The underwriters are breathing down my neck. We start the roadshow in New York next week." I placed a red folder on his desk. "I did not sit down. I cannot sign the S-1, Marcus. And you need to pull the registration statement immediately." Marcus's face darkened. "What are you talking about?" I opened the folder, revealing the wire transfers to Apex Logistics Solutions in Dublin. "I know about the $18 million licensing fee, Marcus. I know the routing software was never updated, and I know you and Ryan Van Camp own Apex Logistics Solutions. You are siphoning capital from the company, hiding it in Ireland, and attempting to file a fraudulent S-1 with the SEC." Marcus stared at the documents. For a moment there was absolute silence in the room. Then his face relaxed, and a cold, arrogant smirk returned to his lips. "Arthur, you are a very good compliance lawyer, but you are a terrible businessman," Marcus said, his voice dropping to a low, threatening tone. "This is international tax planning. It is completely legal. The board knows about it. The CEO knows about it. If you do not sign that folder, you are sabotaging a $1.2 billion IPO. Do you know what happens to compliance guys who block IPOs? They disappear from the industry." I stood my ground. "It is not tax planning. It is tax evasion under IRC Section 7201 and embezzlement. The board does not know you and Ryan own Apex. If I sign this, I go to federal prison. I will not do it. You have 24 hours to withdraw the S-1 and disclose this transaction, or I will report it to the audit committee." Marcus sneered. "You have 24 hours to think about your pension, Arthur. Get out of my office." I walked out, my heart pounding, but my mind remarkably clear. I knew the risk. I went back to my office, packed my personal items into my briefcase, and made sure the encrypted drive was securely inside. The next morning, I arrived at the lobby of the Vanguard building at 8:30 a.m. My security badge clicked against the turnstile, but instead of the familiar green light, a red light flashed, and a loud beep echoed through the lobby. Before I could call the desk, two burly security guards in dark suits approached me. One of them was our head of physical security, a man I had known for 10 years. He looked uncomfortable. "Arthur, I need you to come with us," he said. They escorted me to the elevator and took me straight to the 40th floor. When we walked into my office, Marcus Sterling was standing there, alongside the Director of Human Resources. My desk drawers were pulled open, and my corporate laptop was sitting on the desk, its screen active. "Arthur Pendleton," the HR director said, her voice trembling slightly. "You are being terminated for cause effective immediately." "On what grounds?" I asked. Keeping my voice steady, Marcus stepped forward, holding a USB flash drive. "We conducted an emergency forensic audit of your corporate laptop last night, Arthur. We found that you have been copying proprietary client lists, trade secrets, and pricing algorithms to this unauthorized drive." We have reason to believe you were planning to sell this data to our primary competitor. It was a complete fabrication. They had planted the files on my laptop after locking me out of the system. You are being terminated for gross misconduct, Marcus sneered. Your stock options are forfeited. Your severance is canceled, and we will be filing a civil lawsuit for theft of trade secrets. Security will escort you out of the building immediately. You are not to touch any company equipment. I looked at Marcus. He was smirking, confident that he had destroyed me. He thought he had taken my laptop, my files, and my career, leaving me powerless. Understood, I said calmly. I picked up my coat and my briefcase, which they had not searched, as they believed all the data was on the corporate laptop they had seized. I walked out of the office, flanked by the guards, while Marcus Sterling watched with a look of absolute triumph. He believed he had won. He had no idea he had just walked into the trap. The walk from the 40th floor to the lobby was the longest of my career. But as the glass doors of the lobby closed behind me, a strange sense of relief washed over me. I was no longer bound by the corporate loyalty agreements or the professional courtesy that had kept me silent for months. I walked 3 blocks to a quiet, dimly lit diner on Clark Street. I sat in a corner booth, ordered a black coffee, and opened my personal phone. I dialed a number I had saved weeks ago. "David, it's Arthur," I said when the call connected. "They just escorted me out." I heard a dry chuckle on the other end. "I was wondering when they would get to you," David Chen replied. David had been our senior database administrator for 5 years before Marcus Sterling fired him a month earlier, ostensibly for a budget reduction, but actually because David refused to grant Marcus's personal analysts root access to our secondary transaction databases. "Meet me at my apartment in Logan Square in an hour." An hour later, I was sitting in David's living room, surrounded by computer monitors and half-disassembled server rigs. I placed my personal external solid-state drive on the table. "I have the encrypted transaction logs of Vanguard Caribbean Holdings," I told David. "But Marcus wiped my corporate laptop and locked my user credentials. I need to prove that the Apex Logistics database transfers in Ireland were generated by Marcus's personal login credentials and synchronized directly from our Chicago database." David smiled, a look of technical satisfaction crossing his face. "Marcus and his new tech leads are arrogant, Arthur. They think because they wiped your laptop and disabled your Active Directory account, the trail is dead. But they do not understand how our backup architecture actually works. When Marcus migrated the ERP to the cloud last year, he wanted to save money, so he canceled the contracts for our secondary backup systems. But he forgot one thing." "What's that?" "Our legacy ASCIISWIL database in Kenosha, Wisconsin," David said, leaning forward. "It was a physical server farm we used for disaster recovery. Under the old SLA, the physical servers are owned by a third-party vendor, and they are contractually obligated to keep the data mirrored for 6 months after contract termination. The sync job was never disabled because it was controlled by an old cron job on a local gateway server they forgot to decommission. That legacy server in Kenosha has a complete real-time mirror of the database, including the metadata, the user login sessions, the IP addresses, and the encrypted secondary tax ledgers. And because it is owned by a third-party vendor, Marcus cannot delete the data without a court order." "Can we access it?" I asked. "I cannot pull the data directly anymore since my credentials are dead," David said. "But the vendor's database admin is an old friend of mine. If a federal agency issues a subpoena, he will hand over the backup files in 10 minutes. We just need to give the feds the exact server ID, the database schema, and the sync logs." I nodded. "That is the missing link. I have the financial documents, but you have the audit trail that connects Marcus's personal computer to the transfers." The next step was to bypass the company's internal reporting channels entirely. I did not contact the board of directors or the audit committee. They were too invested in the success of the IPO to act quickly. Instead, I drove to the federal building on Dearborn Street. I had an appointment with Eleanor Vane, a senior investigator at the IRS whistleblower office. Eleanor and I had worked together at the IRS 20 years ago, before I went into private practice. She was a brilliant forensic accountant who knew how to spot offshore tax evasion from a mile away. We met in a small, secure conference room on the 9th floor. I handed her a copy of the encrypted drive, along with a detailed memorandum I had prepared outlining the transfer pricing manipulation and the siphoning of $18 million to Apex Logistics in Ireland. Eleanor reviewed the summary, her eyes narrowing as she read the numbers. "This is not a simple transfer pricing dispute under Section 482, Arthur," she said, looking up. "This is a criminal tax evasion scheme under 26 U.S.C., Section 7201. They are fabricating deductions in the U.S. to shift earnings to Cayman and then siphoning the cash to Ireland. And they are doing it while filing a false registration statement for a public offering." "I know," I said. "I want to file a formal claim under the IRS whistleblower program, 26 U.S.C., Section 7623B. I have provided the specific database schemas, the server locations in Wisconsin, and the exact transactions. The IRS needs to subpoena the legacy server in Kenosha before the third-party vendor's retention period expires in 30 days. Eleanor nodded, pulling out IRS Form 2111, the application for award for original information. "We will fast-track this, Arthur. With the detail you have provided, the Criminal Investigation Division will have enough probable cause to secure a search warrant for the Chicago headquarters and the legacy server within 48 hours. Since this involves an impending IPO, we will also coordinate with the Securities and Exchange Commission." After leaving the federal building, I sat in my car and submitted an online whistleblower report directly to the SEC's Office of the Whistleblower. I cited violations of SEC Rule 10b-5 and Section 806 of the Sarbanes-Oxley Act, also known as SOX, which protects whistleblowers from corporate retaliation. I uploaded the S-1 draft disclosures alongside the actual transactions, proving that the company's financial statements contain material misstatements regarding its offshore tax liabilities and consolidated margins. The legal machinery of the federal government is often slow, but when it is fed precise, high-quality data, it moves with terrifying speed. I had spent 15 years keeping Vanguard compliant, and I knew exactly which buttons to press to trigger an avalanche. I drove back to my house in the suburbs, parked my car in the garage, and sat on the porch. I looked out at the quiet street. For the first time in 15 years, I had nothing to do. I was unemployed, blacklisted, and facing the threat of a corporate lawsuit. But as I took a sip of my tea, I felt a calm confidence. I had done my job, I had protected the law, and now the law was going to do the rest. On Tuesday morning, exactly 4 days after I was escorted out of the Vanguard building, the storm broke. I was sitting in my kitchen, reading the Wall Street Journal, when the breaking news banner flashed across the top of my tablet screen. "Suspends Vanguard Logistics IPO registration statement due to material misstatements." I scrolled down to read the details. The Securities and Exchange Commission had issued an emergency administrative orders, suspending Vanguard's Form S-1 just 48 hours before the underwriting syndicate was scheduled to launch the Investor Roadshow in New York. The article cited sources, indicating that the Commission had received credible information regarding undisclosed offshore transactions and artificial profit inflation. At almost the same moment, David Chen sent me a text message with a single link to a local Chicago news broadcast. I opened the link. The live video showed federal vehicles parked outside the Vanguard Logistics headquarters on Wacker Drive. Dozens of agents in blue jackets with IRS CI and SC printed on the back were entering the building carrying empty cardboard boxes. The news anchor was explaining that federal agents had executed a search warrant at the corporate headquarters, as well as a concurrent warrant at the luxury penthouse residence of Chief Financial Officer Marcus Sterling in the Gold Coast neighborhood. According to the reporter, the federal investigators had also seized database servers from a third-party data storage facility in Kenosha, Wisconsin. David's information about the legacy server backup had been the key that unlocked the vault. The C-suite at Vanguard Logistics was in complete chaos. The IPO was dead, the underwriters had walked away, and the company's valuation was collapsing in the private markets. The board of directors, who had been dreaming of $100 million payouts, were now facing shareholder lawsuits, corporate insolvency, and federal criminal investigations. My phone rang at 2:00 p.m. The caller ID was restricted, but I knew the number. I clicked the record button on my secondary device and answered. "Arthur," Marcus Sterling said. His voice was no longer arrogant. It was cracked, tense, and shaking with panic. "Marcus," I said calmly, "how is the weather on Wacker Drive today?" "Arthur, we need to talk," he said, ignoring the sarcasm. "We need to resolve this. It is a misunderstanding. The board is willing to settle the civil dispute. We will drop all charges regarding the trade secrets. We will pay you your full severance plus your vested stock options. We can value them at the pre-IPO price. It comes to about $1.2 million. I leaned back in my chair. "I do not think that is enough, Marcus. You accused me of theft. You escorted me out in front of my staff. You tried to ruin my career." "Arthur, please," Marcus pleaded, his voice dropping to a desperate whisper. "I can make it $3 million. We will write it as a corporate consulting agreement. You just need to sign a retraction letter to the SEC and the IRS, stating that the Apex Logistics documentation you provided was a draft tax planning model that was never implemented, and that the $18 million was based on a legitimate valuation study. It is just a paperwork issue, Arthur. We can fix this." I listened to him, feeling a deep sense of disgust. Even now, facing federal indictments, Marcus Sterling believed that everything and everyone had a price. He thought he could buy his way out of a federal felony. "It is not a paperwork issue, Marcus," I said. "The $18 million was transferred to Dublin. The ultimate beneficial owner of Apex is you and Ryan. The money has already been spent or moved, and the legacy servers in Kenosha have the metadata of your personal login creating the invoices. You did not just make a mistake. You stole from the company and lied to the federal government. How? How do you know about Kenosha?" Marcus stammered, the panic audible. "Because I know my job, Marcus, and I know the database architecture of the company I protected for 15 years. You wiped my laptop, but you forgot that the servers in Wisconsin do not report to you. The IRS and the SEC have had the full decrypted database logs for 48 hours. The warrant they executed at your penthouse this morning was for the primary keys to your Irish accounts." There was a long silence on the line. I could hear Marcus's heavy, erratic breathing. "Arthur, you are destroying the company," he hissed, his fear turning back into anger. "If Vanguard goes under, hundreds of people lose their jobs. All because you wanted to prove a point." "No, Marcus," I said. "I did not destroy the company. You and Ryan did, the moment you decided to treat Vanguard's treasury as your personal piggy bank. I just filed the tax returns." I hung up the phone and stopped the recording. I knew that the phone call was the final nail in Marcus's coffin. He had just attempted to bribe a whistleblower and obstruct a federal investigation on a recorded line. I emailed the audio file of the call directly to Eleanor Vane at the IRS and to the SEC enforcement attorney handling the case. I knew that Marcus Sterling's options had just run out. He was no longer fighting for his job or his reputation. He was fighting to keep his prison sentence under 10 years. I went into my garden and began pruning the rose bushes. The afternoon sun was warm and the air was sweet. For the first time in my life, I was not thinking about the tax code. I was just enjoying the quiet. The wheels of justice ground forward steadily over the next 12 months. Vanguard Logistics Group did not go bankrupt, but the company that emerged from the wreckage was vastly different. The board of directors, in a desperate attempt to salvage their reputation and avoid insolvency, fired Marcus Sterling and Ryan Van Camp within 48 hours of the IRS raid. The CEO, Richard Caldwell's brother-in-law, was forced into early retirement, and a new executive team was brought in with a mandate for absolute transparency and compliance. The Department of Justice, armed with the database logs from the legacy Kenosha server and the recorded phone call where Marcus tried to bribe me, moved quickly. Marcus Sterling and Ryan Van Camp were indicted by a federal grand jury on charges of conspiracy to commit wire fraud, tax evasion under 26 U.S.C. Section 7201, and securities fraud under the Securities Exchange Act of 1934. Marcus's legal team tried to fight the charges, but the evidence was overwhelming. The secondary ledger, coupled with the digital signatures matching Marcus's corporate credentials, left them with no defense. Ryan Van Camp, terrified of prison, agreed to a plea deal, testifying against Marcus in exchange for a lighter sentence. Ultimately, Marcus Sterling pleaded guilty to tax evasion and wire fraud. The judge sentenced him to 5 years in federal prison, followed by 3 years of supervised release. He was also ordered to pay restitution of $9 million and forfeit all assets acquired through Apex Logistics Solutions. Ryan Van Camp received a 3-year sentence in a low-security federal facility. Vanguard Logistics Group settled its liabilities with the federal government. The company agreed to pay the IRS $24 million, which included the back taxes on the $18 million of disallowed software deductions, statutory interest, and a 40% civil fraud penalty under Section 6663. In addition, the SEC imposed a $10 million penalty for material misstatements in the IPO S-1 filing. The total recovery by the federal government was $34 million. For my role as the whistleblower, the law worked exactly as it was designed to. Under 26 U.S.C. Section 7623B, if the IRS proceeds with an administrative or judicial action based on information brought by a whistleblower, the individual is entitled to receive between 15 and 30% of the collected proceeds because the information I provided was highly detailed, including the database schemas, the server locations, and the encrypted keys. The IRS Whistleblower Office determined that my contribution was maximum. They awarded me 25% of the collected proceeds. 13 months after I walked out of the Vanguard building, the wire transfer cleared into my personal account. The payout, after taxes, was $8.5 million. I did not buy a sports car or a mansion in the Gold Coast. I did not need to. I sold my house in the Chicago suburbs and bought a quiet mid-century modern cottage on the eastern shore of Lake Michigan, just outside of Saugatuck. Today, my mornings are spent walking along the beach with my dog, watching the waves roll in from the lake. The air here is clean, free of the city exhaust and the corporate tension that defined my life for 15 years. Sometimes I read the financial news. I saw that Vanguard Logistics finally went public last month. The listing was much smaller than Marcus had planned. A quiet $600 million IPO, built on realistic shipping margins and clean books. They have a new compliance counsel now, a young man from the SEC. I hear he is very thorough. Every now and then, I look at the small brass key sitting on my desk. It is the key to my old office on the 36th floor of the Vanguard building. I kept it as a reminder. Corporate climbers like Marcus Sterling think that compliance is a barrier, a set of annoying rules designed to slow down their ambition. They think that lawyers like me are just overhead, easily replaced and easily discarded. They do not realize that the rules are not just lines on a page. They are the structure that keeps the entire system from collapsing. When you break the rules, you are not just taking a risk. You are loosening the bolts of the machine you are standing on. I did not destroy Marcus Sterling. He built a tower of fraud, and I simply refused to help him hide the foundation. He pulled the pins himself, and the weight of his own greed did the rest. I take a sip of my coffee, close my tablet, and look out at the lake. The water is calm, the sky is clear, and for the first time in my life, the books are perfectly balanced.